I'm back, baby. Oh, man, it feels good. After it's been a rough couple of weeks, I'm not going to lie to you, but I'm happy to say that I'm on the road to recovery, and Bitcoin seems to be on the road to recovery, too. Hey, guys, it's Keith Allen, and feeling good today after what's been a bumpy couple of weeks. But, man, so much going on. Where to begin, right? Been a just crazy several days here. To say the least. That's probably an understatement. You know, I'm going to get into that in a second. And in terms of the charts, I mean, there's a key debate going on here. You know, the elephant in the room, believe it or not, isn't the assassination attempt on Trump, although that has actually got some significant merit on what we're seeing in the charts. I think, believe it or not, you know, the more I analyzed the charts here over the weekend, the more I started to see the similarities, as an analogy to what's been going on in the political environment here in America. And I want to say, first and foremost, I'm not political. I'm not a guy that likes to discuss politics, and I'm not opening the door for that here. But I've got to say that what we saw happen here over the weekend, there's just, I don't care where you stand politically, there is no freaking place for that in America or anywhere in the world. In my opinion, I don't care how you feel about the guy. There's just no place for that. So let's all take a breath and take a beat, and hug your family, have a meal with your neighbor, and move on, right? And it seems that this is really a pivotal point in American politics, and it seems like it's a pivotal point for crypto as well. Believe it or not, Bitcoin actually dodged a couple of bullets of its own here in the past week, and I'm going to break down exactly what those are. In this analysis, I'm gonna show you what I've been watching. I'm going to show you how close we came to triggering really some major things that could have really plummeted us into a deeper correction, potentially even ended this bull run, altogether. And we'll take a look at what order book and order flow data are looking like in fire charts, of course, and what my targets are to validate or invalidate what looks to be an absolute monstrous structure, a cup and handle pattern forming. I actually talked about this back in March, and I'll have a link in the description of the video where you can go back and look at that analysis where we saw this cup and handle forming. And it's not played out yet, but it certainly seems to be developing in the right direction. So we're going to look at the key components of a on technical analysis from a technical analysis perspective of what this cup and handle needs to do to validate or invalidate, and what the targets might be there all along. So first and foremost, let's just start, I guess, with a fan favorite and take a look at what the order book looks like, because it's been changing here dynamically over the past few weeks. And so let's go straight to the charts right here and get into it. Here you can see, right, over quite a long time. This is just a month here. Let's widen out even further and look at how liquidity has changed over the past several months here, right? So let me enlarge this and show you, the key areas of concern that we had on the upside. We had so much ask liquidity up here. It was just impossible to penetrate. We did, of course, make an all-time high, but things really got stacked up in here, and it was just relentless. And as things thinned out below us, we saw price degrading. No question about that. But through this process, much of this ask liquidity above just started raining down into the active price range, and to the point where it has thinned out significantly what was up here in resistance. We still have quite a bit above, and more recently we saw that FUD come in on Mount Gox in Germany. How is that going to impact things? And obviously the market reacted to that. We had a big dump, a big pullback here to levels that we had been watching on the charts. We've been telling you for a long time, hey, that 50 to 52 range, that 50 to 52K range could come into play, and even the 40K range could come into play at some point if that doesn't hold. And in this situation here, as you can see in the chart, here's that 50 to 52K range. We came very, very close. Now that doesn't mean just because we're bouncing here, and by the way, nice weekly close, back to back trend precognition long signals here. And yesterday's signal, by the way, this is tentative still, but we do have confluence between both the A2 plus and the A1 algo here. So that's always good to see. This is a strong signal. I feel pretty confident in it right now. That does not mean that we can't go back and revisit these lows. In fact, one of the things we're going to talk about is the resistance that still remains above. And the first thing that's coming into focus right here is this 21-week moving average. You'll notice I normally have all my key moving averages up here. I have the green 21 and the purple 200 highlighted today because these are the ones that have been the most important to me, the ones I've been watching the most, and the ones that quite frankly have come into play here. I'm going to talk to you about that in a bit when we talk about dodging some of those bullets a little bit. On top of that, back on the liquidity side, you can see, I always say that liquidity equals sentiment. And for the longest time, we didn't have any sentiment down here in this 40K range or even much in the 50K range. And that started to develop, right? Now you see it's thinning out, and it's thinning out because buying is coming in with volume here at this point. We'll tighten in a little bit on time frames. And now you can see, another ladder of ask liquidity coming above. So in terms of this pattern playing out, and I guess I should talk about this cup and handle pattern that I mentioned here at the top of the stream. We obviously are now in this handle development, and so for this to play out, some key things need to be crossed. We need to clear this 21-week moving average, which is coming into focus quickly. And then, of course, we have this resistance at the prior 2021 top, the current all-time high, and just the heap of liquidity that remains in there. But we were talking a bit about the Mt. Gox distribution in Germany and what other sovereign nations are going to distribute coin. The thing I always find surprising is how much people panic at the fact that this coin is coming into the market. And sure, that's significant. But remember, it is in their best interest not to dump the market, right? They want to sell those coins at the highest price that they can. So when you see ladders like this, and I have no way of proving that this ladder that just appeared here, I have no way of proving that this is Mt. Gox distribution or Germany or anything like that. However, it resembles what I would expect to see in the form of that type of distribution, right? Because this is something that can be absorbed as demand goes up. And we obviously have demand developing here. I mean, look at what happened over the past week in terms of ETF demand. There's a lot of appetite for sub 60K Bitcoin. So going to be interesting to see if this volume, I mean, look at what we had on Friday. Going to be very interesting to see if this kind of volume continues as we push past 60K and higher, above 65K, and so on and so forth, right? Because this could really be the pivotal moment. Now, how do we know this is coming? Let's go back to the candle chart here. And I talked about dodging bullets here. And the two things that we saw here over the week, I've talked to you guys for a long time about a secret little, maybe it's not a secret anymore, a secret indicator that I've been watching for years. I've been telling you guys about this for years. And that's the RSI on the weekly chart. And if you look down here on the RSI, you can see I have a little line here on the at the 42 level. And historically, that level has always marked bull markets beginning and ending, or bear markets beginning and ending. And so above that line, at or above that line is bullish, below that line is bearish. And we were on an absolute, almost a free fall to that. And Friday, this is where we bottomed out on Friday in that dump to the 53.5 range or so. And, a lot of people were alarmed, myself included, by breaking this structure here, right? And now you see a hard V-shaped recovery. We went down to 45 and change, and a hard V bounce from that approach to retest. And let me widen back out real quick. I encourage you to look at this on your own chart. I'm not going to take the time to do it, but if you look at it on your own chart and you draw that line on the weekly RSI on Bitcoin, I'm not saying this works for everything, but it works on Bitcoin on the weekly chart, and just look and see how price behaves when price moves above and below that 42 level on the weekly RSI. The other thing, the other bullet we dodged, and this was a big one. I mean, I thought that a death cross between the 21-day and the 200-day moving average was imminent. I was writing the analysis, I think Friday or maybe Saturday, and I didn't. I was looking at the charts, and okay, maybe somewhat medicated from surgery. And I was like, I just not feeling confident in this analysis. Let me just watch how things develop. And that, my friends, is a note for patience in this game. And look how close we came. This would have been a death cross that could have negated things, because, and the reason is because if you look historically, every time that green 21 and that purple 200 have crossed, it has been ugly. I mean, deep corrections. So look at this. I mean, this was at the beginning of the bear market, of the last bear, okay, back in January 2022. And that's when we bottomed out, right? So, and if you go through history, you'll see more examples of that cross taking us into deep corrections. So between this one and that possible retest of this 42 level on the weekly moving average, this would have been if we had lost that 50 to 52K range, we would have lost this 42. And either of those things could have meant an end to the bear market, to the bull market. I mean, and in fact, my analysis that I was writing was, it's not whether or not we're going to see this death cross; it's how fast we recover. And we just absolutely narrowly missed this death cross. And look at this candle. And this I mean, this began with this candle. I mean, right as the drama was unfolding with Trump. I mean, I was online, scrolling through Twitter, and saw what happened. And one of the first messages I saw was $10 million Bitcoin donation just went to Trump. And, whatever the politics are of it, I don't care. But in terms of what this means for the market, I mean, it is an absolute reversion of the short-term trend and an extension of the macro trend right here. And you see price is pumping. So now let's get into the characteristics of this structure. The cup and handle on a long-term horizon. I mean, we're talking 2 years and 8 months in development here at this point. So this is not your average run-of-the-mill cup and handle. This is a big freaking deal, because if this does indeed play out, and it has to validate, it actually has to play out, right? So a rejection, we've learned that things can change in an instant, and a rejection could come from here and send us back down. But as long as we hold these levels, and we don't lose that RSI level that I think is right around here at this 50K range, as long as we hold 50K, then this is still intact. I mean, there were some scary moments. You see this line right here, this trend line that was lost. This was kind of our upward trajectory through the year, right here, and breaking down from this made people nervous. Losing this range made people nervous, but those candles closed. We managed to somehow stay in the box. But your patience and your conviction were definitely tested. A lot of people got wrecked here. Now, at this point, I hope that all those shorts that were stacked way above, I hope they were smart enough to close, because obviously there's a recovery happening here. Now, are we going to go straight off the top from here? That remains to be seen, and I would not expect that. I would expect to see more, you know, listen, this isn't the time to get impatient. I would expect to see more, more moves into resistance with some profit taking, and then some dips with some accumulation, and then another run at the next level, et cetera, et cetera. I think that I've always said that's a healthier approach than just rocketing out the top. So what we're seeing right now, in terms of this structure, we have the structure here. It goes, part of it is it should be about 2/3 the depth of the prior market, and you can see that we're right there. From this run to this run. And then you can see that we have symmetry. Now, there's some controversy over whether this is indeed a valid structure. And one of the reasons is because the right side is higher. Um, my analysis is going to conflict with somebody's. I'm sure is going to clash with somebody who says, "Oh no, it's not a valid structure." I encourage you to do your own research on this, and I find Chat GPT to be a pretty good resource for some of the things that I was looking into and seeing questioned. And for me, this higher side is still well within the tolerance of this of a classic cup and handle. The second thing is that this first candle went to a new all-time high, and that, of course, made that higher right side. Although I like symmetry, so that's why I have a log scale, and I've drawn my rim to the prior 2021 top, because that's where I saw back in February, March. That's where I saw this thing developing, and then this wick didn't come until the following week. So in a classic cup and handle structure, in a valid structure, the handle on a macro scale like this needs to be multiple weeks in development. And so the fact that we wicked up here on 1 week does not concern me, because we came back down rapidly. And so as you can see, things continue to develop. Oh, here we go. Drawing tools. I'm getting cocky here now, right? Pulling out the drawing tools in such a short time. So here's that top, and we came down to a low. A lot of the market felt like this was going to be the bottom, and then we shot back up. We retested. We broke through this 21 week moving average, which was very concerning to me. But now it seems that we've turned the corner and are now headed at least in the right direction, with some momentum to get things going here, right? So we could ping back down here and then go back up. And this could go for an extended period of time. But what I'm looking at now, and one of the key characteristics of a valid cup and handle structure, is the volume profile on the downtrend of the handle, and then, of course, on the breakout attempt. And what technical analysis says is you should see declining volume on the downtrend of the handle, which you can see right here was our move to the top of the rim, and then we did see indeed declining volume on the way down. And now in these past couple weeks, we've seen that volume start to pick up. And so I can enlarge that for you here. I know some of you guys hate fat candles, but I'm going to enlarge that some of you for you guys to take a look at now. And you can see that we do, obviously last week had increasing volume, slightly increased the prior week as well. And so this trend is moving in the right direction, and we want to see it continue to move in this direction to up to and through a breakout. So how high can we go from here? If this does indeed play out as it's developing right now, if this does indeed play out and we see things extend up, how high can we go? Well, to do that, we do what's called a measured move. And a measured move could be drawn a number of ways. You could just take your line and draw it. And this is what you would do on a linear scale. But since this is such a large amount of time, I'm using log scale. So what we're going to do instead is we're going to measure it as a percentage. And so we go from the rim, and I'm still calling the 2021 top the rim. Others might call the all-time high the rim. We're splitting hairs at this point. We're looking for a range here. And so this is roughly a 77% move. And so if we take this same 77% move and we move it to the breakout, let's see where we end up. That's not what I'm looking for. Hold on a second. I'm on log. We go to the rim and we want a, did I click something? I think oh, okay. Let's get this right. 77%. And now let's just draw a 77% move from here. Bear with me. $77. All right. So this puts us in the realm of, let's get our levels right. Actually, that breakout is going to be from the all-time high, because that would be the breakout, right? So we're at that's close enough. 73.8 was the all-time high, right? So this puts us in the realm of 120, 125, $130,000 for this move if it fully develops. Now, that does not mean that we are going straight to 130K from here. Does not mean that at all. In fact, I like this. I'm gonna correct myself and say I like this better from the rim that I formed. You can draw it however you like, but I think we're somewhere in that range, $125,000, $130,000, which again, you can't bank on that number, because you have to always, like with everything in trading, you have to always consider what's changing in the market. You have to consider all the fundamental factors, all of the other elements that might be coming into play, all the outside forces, political environment, geopolitical tension, et cetera, economics, inflation, and so on and so forth. And as I said earlier, as we learned this weekend, things can change in an instant. So just know that we have the potential to be up here in the $125,000, $130,000 range if this move fully develops and plays out. All we have to do technically is break out the all-time high and get into these new levels, and that would, in my opinion, validate the structure. But a lot of upside potential there to look forward to. And again, doesn't mean that we can't go back and revisit these lower levels. Just means that I'm watching very, very closely to see if we can break past this 21-week moving average and then start working our way through this upside liquidity up here that is forming strong resistance. But I got to tell you, this looks pretty strong. Another thing we can look at in terms of how this has been developing is historically what has been happening over the past year or so, right? Since we got into this market. I mean, what we've seen, the uptrend that we've really got going on right now really started around Christmas time, right? Maybe a little bit earlier, but the real heavy movement started Christmas time. We bottomed out when around I guess, well, I mean, the real bottom was back when the FTX crashed back in 2022. But there was a lot of uncertainty of what was going on, and there was a lot of selling going on the way up. A lot of what we called bear market rallies. But real accumulation began around Christmas, ahead of the ETF releases for Bitcoin, and as you can see, the largest classes being purple whales, brown whales. These red sharks came into play around the ETF scene, but you can see that even they are now have kind of changed their profile. This is really what I'd focus on, and purple is really who I focus on the most. In terms of volume, there's a big difference between what brown and purple are doing. In fact, if we switch over to the absolute CVD, we can see that uh, there's about $100 million difference between these two classes, despite the differences in their order sizes. So nonetheless, it's clear that they have been accumulating, and sure, there's been some profit taking along the way. But the long and short of it is, there's been some accumulation, and I think the difference in the volume profile of what these two have done is that purple has sold a lot more than brown has in their in their accumulation pattern. So right now things looking pretty solid nonetheless. Lots of liquidity up here to be taken to get into the actual breakout. However, things certainly seem to be moving in the right direction, and that for me is a positive. Gonna wrap it right there, guys. I meant to tell you at the top of this thing, I always forget, but man, if you enjoy these analysis, I really appreciate the support. Please smash all the buttons and subscribe so you never miss one. And I do want to say, I really, really, truly appreciate the support you guys showed me while I was down and out. Glad to have that stuff behind me, and well on my way to a full recovery. So hopefully, pretty soon I'll be back in the full swing of things. But hoping that I can continue to resume the live streams and continue to crank these out for you Monday through Friday as we were doing in the past. Thanks again, guys. For more on the tools that I'm using, by all means, check out materialindicators.com. I've got links in the descriptions. And again, you can follow me on X. You can follow me on YouTube. Make sure you subscribe to the YouTube version. You will never miss an episode. I'm not firing on all cylinders yet, I don't think. So you never miss an episode. Make sure you subscribe on YouTube. Hey, thanks again, Alexander. I appreciate it. And what else? I had one more thing I want to share with you. I don't know. I forget. Nonetheless, things are looking pretty good right now, guys. So trade smart. Don't be greedy. Make sure you take profits. And oh yeah, hug your family and hug your neighbors. Right? Life is good and it's precious. So remember that. Have a great day. Have a great week, my friends. I'll be back at it later.